Welcome to this post-market analysis. I will be analyzing Nifty index now. Nifty opened gap up today. So I have marked the first 15 minutes high and low. The first 15 minutes candle high is 17,306 and first 15 minutes candle low is 17,176. So these two highs and lows I will keep as benchmark. After the opening candle of first 15 minutes, the candle closed below 21 exponential moving average. So we had lot of opportunity to take a trade. But why I take a trade is the important question which I will answer in quite some time now. What I see here is for after the first 15 minutes, market went up again. Nifty went up and closed above 50 exponential moving average. Then it closed below 17,306. Let me keep it as a round figure, 17,300. After this, never ever market reached 17,300. There was a very good opportunity at 940 to take a trade input option. The high made on this candle is 17,278 and low is 17,237. It's almost 40 points. I will not take a trade here. The next red candle was at 10.05, which the high on this candle, every parameter on this candle will match. The high on this candle is 17,228, low on this candle is 17,197. This is almost 30 points. So this is a very good candle to trade. So what I can do here is I will take a trade here below 17,197, which is almost 17,195 to keep it as a round figure, 17,195. And my stop loss will be 17,230, which is above 21 exponential moving average, 21 EMA. So this is the right candle to make an entry. Before that, there is no other candle wherein we could have entered in the market. Now, let me check here at 950. 950 also, it was 42 points. High on this candle was 17,252 and low is 17,210, which is almost 40 points. The stop loss is too big. So my candle range should be below 32 points. 28 to 32 points is the good candle range to enter the trade. So I entered the trade here 10.05. The range was almost 30 points and there was a very good move, but my target is only to take 10 to 12 points out of the market. I'm not greedy, and this was an excellent trading opportunity which I had today. Actually, Nifty came down till 17,040, but this did not go below the support, the major support 17,043. The major support was 17,043. None of the candles closed below 17,043. So there was a bounce back from 17,043, and we also can think of this buying opportunity. I have made a different video, so please look into that video, which is already uploaded on YouTube. So today we had two trades, one on the sell side and the other one on the buy side. Sell side I have explained you in this video, and on the buy side there is another video. Just click the link on the top so you will be able to see that video. Even that video was also a fantastic video. So please see that video and you will know why I took the trade and where I took the trade. I think you have got a lot of value out of this video. So I request you to subscribe to get all the latest update and also to know how to be that 5% successful trader. I want you to be in that list of 5% successful trader. Please subscribe to this channel. Also, please comment your understanding. Let's analyze the put-call ratio. The call open interest as on 8 February, that is Tuesday, the call open interest is 18,99,327 and put open interest is 10,31,607. This data I got from NSE website. So the put-call ratio here is 0.54. So here I have a benchmark here. If PCR, which is nothing but put-call ratio, is greater than 1.7, we can see a crash in the near future. If put call ratio is lesser than 0.8, then we can see a rally from here in the near future. So as per this data which I have here in front of me, as per the NSE India website, the put call ratio is 0.54. So in the near future, we can expect a good bull run. We can't say that it may happen tomorrow, day after tomorrow, but in future, in couple of days, maybe tomorrow, day after, or on Monday or Tuesday, there will be a good rally. That's what my interpretation is, and that's what my experience is. So put buyers, please be cautious. Now let's see what do we have for tomorrow. That is Wednesday, a day before the expiry. It will be very volatile. Now the important resistance here is 17,366 and support at 17,105. And also there is another pivot which is 17,175. However, on a weekly chart, this weekly candle is closing below 21 exponential moving average, and on a daily chart we see both the exponential moving averages are together. The entire month of December and January was very flat. It was trading sideways, except for some days in the beginning of the month, January month, it was on an uptrend, but later it was flat. An hourly trend, it's very clear that it's showing downtrend. There is no clear indication of an uptrend or a downtrend. The important resistance for tomorrow is 17,366 and support is 17,105, and the pivot point is 17,175. So we need to be very careful at 17,105 and 17,366. So have a wonderful trading day tomorrow. Enjoy your profit.